It's the biggest question in business right now. Is the AI boom real, or are we living through another bubble? From Wall Street to Silicon Valley, America is obsessed with artificial intelligence. Tech giants are posting record profits, startups are raising billions overnight, and chip companies like Nvidia have crossed trillion-dollar valuations. But beneath the excitement, cracks are starting to appear: rising costs, uneven returns, and a growing sense that the money may be moving faster than the technology. Some analysts say this is the next industrial revolution. Others say it's the next dot-com bubble. So what's the truth? Let's break down what's driving the AI frenzy and whether it can actually last. 1. Déjà vu. The bubble warning signs are here. It all feels familiar. A breakthrough technology, runaway stock prices, sky-high valuations, and promises of a future that's too big to fail. We've seen this movie before, with dot-coms in 2000, crypto in 2021, and electric vehicles soon after. Now it's AI's turn. Nvidia's market cap recently topped $3.3 trillion, making it more valuable than Amazon or Alphabet. AI startups with little to no revenue are raising money at valuations north of $10 billion, and venture funds are pouring in capital at the fastest rate since 2021. That's not hype, that's a speculative fever. The question is whether it's justified. 2. The core of the boom: compute and confidence. Unlike some past tech bubbles, the AI surge is built on something real: compute. AI systems need enormous amounts of hardware, data, and energy. That's created a genuine industrial boom: new factories, chip plants, and data centers across the US. In that sense, this isn't just digital vapor, it's physical infrastructure. The real question isn't whether AI will be valuable, it's whether its profits can match its price tag. Because right now, the market is pricing A. I like it's already reinvented every industry, even though most companies are still figuring out how to use it profitably. 3. The productivity mirage. One of the big promises of AI is productivity: faster code, smarter workflows, fewer workers, and on paper it's happening. US productivity numbers have ticked upward for the first time in years, but economists say the data might be misleading. Most of the gains are concentrated in tech-heavy sectors: finance, software, and logistics, not across the broader economy. That means AI's impact may be narrower than the hype suggests, at least for now. It's a classic early boom pattern: visible impact in one corner, speculation everywhere else. 4. The corporate gold rush. Every major US corporation is now an AI company. From fast food chains adding AI ordering systems to insurance firms testing claim bots, AI has become the new corporate status symbol. But behind the scenes, CFOs are worried. AI expenses, especially cloud computing and data cost, are eating into margins faster than returns are showing up. One executive put it bluntly: "We're not sure if this is the new electricity or just the new expense." That uncertainty is what defines the edge of a bubble. 5. The investor euphoria. Wall Street has gone all in. AI-related ETFs have seen record inflows. Retail investors are buying chip and cloud stocks at historic highs. Even companies that mention AI in earnings calls see their stock price rise an average of 15%, regardless of fundamentals. That's not rational growth, that's momentum trading. In fact, Morgan Stanley recently warned that AI stock concentration in the S&P 500 is approaching dangerous levels, with 7 companies now accounting for nearly one-third of the entire index's value. Sound familiar? That's exactly how the dot-com bubble looked, right before it burst. 6. The cost problem. No one talks about training large AI models is expensive, very expensive. A single top-tier model can cost over $500 million to train. Running it, or inference in industry terms, can cost even more. And the power demand is skyrocketing. Data centers in the US are expected to consume 10% of national electricity by 2030. That means AI growth isn't just about innovation anymore, it's about logistics, infrastructure, and sustainability. At some point, physics and economics catch up. 7. The profit reality check. Here's the hard truth. For all the excitement, very few AI companies are actually making money. OpenAI's revenues are rising fast, but so are its expenses. Anthropic, Cohere, and Mistral are still burning through capital, and even big tech players admit that their AI services aren't yet self-sustaining. In other words, the value is expected, not earned. That doesn't make it fake. It just makes it fragile. 8. The arguments against a crash. To be fair, there's another side to the story. Unlike the dot-com era, today's AI companies have real customers, real infrastructure, and real use cases. Generative AI is already embedded in software, marketing, healthcare, and finance. Businesses are saving time and automating tasks daily. That means even if valuations cool off, the technology won't disappear. It's too integrated to vanish. So yes, we may see a correction, but a collapse? Unlikely. This bubble, if it bursts, will deflate, not detonate. 9. The coming shakeout. Every major tech revolution goes through a shakeout. The internet did. So did social media and smartphones. AI will too. Over the next 2 years, expect hundreds of AI startups to disappear or consolidate. Only those with real products, profitable customers, and efficient models will survive. It's not the end of the AI boom. It's the end of the AI lottery. The survivors will be the ones building platforms, not just features. 10. The takeaway. Not a bubble, a transition. So, is AI a bubble? Yes, but not in the way you think. It's not a bubble of technology. It's a bubble of expectation. The hype, the valuations, the promises, they'll fade. But the infrastructure, the data, and the capabilities will remain. Because bubbles don't just burst, they leave behind foundations. And those foundations become the next generation of real, profitable industries. That's what's happening now. AI might be overvalued in the short term, but in the long term, it's inevitable. Just like the internet bubble led to Amazon and Google, the AI bubble will create the next trillion-dollar companies after the noise clears. So yes, there's a bubble, but behind it is something bigger, a revolution that's still in progress.